Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We're just super excited today. We have one of those community all-stars on our podcast today, Mr. John Casmon. John, thank you very much, brother.
Abel, thank you for having me on the show today, man. Let's rock it.
Yeah, we're going to have a great conversation. If you're not in the commercial real estate multifamily, kind of community, go Google John Casmon, maybe John Casmon Real Estate or John Casmon Multifamily, and I'm sure he's going to show up a bunch of different spots. He's a multifamily investor. He's a marketing maven who helps others really leverage multifamily and really marketing to grow their portfolio. So he's got really two of the best mindsets, in my opinion, for the business. You got to have exposure and you got to know like what you're investing in. I think in the world of syndication, it really does bring a lot of value. So he's going to be a tremendous guest. And if you don't know him, then you need to also go to his podcast. It's Target Market Insights. It's basically the multifamily and marketing podcast. He talks about both of those, and you need to subscribe, you need to rate, you need to review, go listen to some shows. He's amazing. He was one of those people that I learned from when I was first coming in. I'm like, oh, how do I break down some market mechanics? When I say those terminology, some of that stuff is from John. So I'm appreciative and I'm blessed and humbled you're on the show, my friend.
Abel, thank you, man. Thank you for that warm introduction.
Yeah, you're the man, dude. I can't not highlight it, my friend. So let me turn it over to you though. You have your own story and description of it. Tell us, let's just start a great conversation, man. Tell us who you are, what you do, and we'll start talking about what you do now as well.
Yeah, absolutely. Listen, today I'm a multifamily investor. I partner with other people, busy professionals, families, friends, folks who are looking to earn passive income, lower their taxes, and diversify from the stock market. This is not what I set out to do. It just got to happen this way. And like many of your listeners, I was a W-2 employee working in corporate America, went to college, graduated, got a job in marketing, which is what I loved. I always enjoyed understanding marketing and communications and things like that. So I was working for, General Motors at one point. And, I worked for worked on a lot of different campaigns and different brands, from Buick to Mountain Dew, Nike, Coors Light. And I mentioned my time at GM. And I would say that there are a couple of inflection points for me. Okay. Inflection points. The first one was at GM 2008, and you guys know what happens, right? So 2008, the world economy or the US economy starts to crumble, and I'm watching this firsthand at work. So I'm seeing my bosses on CNN, Fox News,
Oh my gosh. Yeah.
MSNBC, and the person who sat across from me or straight ahead, I could see their office. 3 hours later, I'm watching them on cable news, and there was a lot of panic that set in. Now, I was okay. I was a younger executive. I was told I was going to be okay. And, people tell you things all the time and it doesn't work out that way. Sometimes they're just trying to keep the boats calm.
Yeah.
And I remember the day they had layoffs, I went into the office and there was a red light on my phone. There was a voicemail. I felt panic and fear. I felt like I'd been lied to and all these thoughts before I even listened to the voicemail, right? I had all these emotions, all these thoughts. Finally listened to the voicemail. It's the guy who's just sitting in front of me. he had been let go. Now he was a lifer. He was a guy who had worked for the company for over 20 years. He had planned on retiring from the company.
Mm-hmm.
There was no plan B. He got the job that you get, and that was the plan.
Yeah.
That was it. There was nothing else. It was get this job, work it until they kick you out, and then you figure out what else you want to do with your life. And I just remember listening to that voicemail, and there was a sense of empathy for what he was going through, and there was a sense of, just I don't even know what emotion to call it, but for me, it was like panic. It was like, I never want to feel this. I never want to be in a situation because keep in mind, I wasn't out of the clear. I mean, anything could have happened later on that day, the next week, the next month, the next, year. So it wasn't like, oh, that's really bad for him. We were, I'm watching the guy, but I'm still on the boat, like looking for a life preserver jacket too.
Yeah.
So I just remember at that moment, I said, this is stupid. I can't just keep going down this path and feeling like this every week, every month. And it had nothing to do with the company. It was just, I didn't have any control. I had
Mm-hmm. Mm-hmm.
no control of how I made money. And that piece started to really click. And I thought back to Rich Dad, Poor Dad, and a lot of those different lessons. And it's like, all right, I need to start transitioning. So that day, I made a mental decision to figure out how to invest in real estate. It took me a little while before I actually did it, but that day was the day it triggered, and I made a mental commitment to say, okay, we're going to start building, you know, alternative streams of income. And I would tell you, for where we're at in our environment, our economy today, I don't care where you're at, you need to have that. If you're a doctor, you're a CPA, you're an accountant, you are in the tech industry, you're in sales, if you have a W 2 job as your only source of income, you need to figure out a way to get another stream of income now, not 2, 3 years from now. Now, you see what COVID has done to a lot of working class people. You see what it's doing to folks who, need that stimulus check to pay their bills, buy groceries. Don't allow yourself to be put in that position. Yes, this is something none of us could have controlled, but we always have to take accountability for ourselves and putting ourselves in a position to take care of our family. Because the kids aren't trying to hear coronavirus is the reason you can't have lunch today, or the reason we have to move into this small apartment or whatever the case may be. And I don't say that to um belittle any of those things. I mean, I'm a guy who, first time I lived in a house, I was 13. I was on my dad's side, and uh on my mother's side, we pretty much rented my entire life. So I come from those, you want to call humble beginnings, whatever you want to call it. But the point is, you have to take ownership and control, and it starts with your finances. And I think it's one thing to be interested in investing in real estate, it's another thing to treat it as an obligation. And I'm not saying real estate, but to find other ways to make money and to control your income, not necessarily your salary, through whatever means. And if real estate's a part of that, then it's time to go from being on the fence and wanting to be an investor to making it happen.
Yeah, yeah. So many good, things and mindsets here that come up personally. And I'm taking notes, and I'm looking at that feeling of having no control, the emotion part of it, where your story starts out from. And, that's very relatable. And, I experienced it in 2008. And then again, for me personally in 2015, it wasn't a market issue. It was just the tech, job that I had, and it was going public to private. And we were like, man, am I going to end up here? And I'm one of the high paid guys, and am I going to get cut? And, you're walking on eggshells trying to do, so many emotions come back, and having to let go of, 10, 15 people out of a 60 person team are like, hey, this is, it's not fun, delivering that news to everyone. And you, like you said, trying to keep the boat calm. That's your job. So not a fun one, man. And then, what I thought about was Warren Buffett's quote, right? It's if you don't find a way to make money while you sleep, you're going to work till you die. And, it's just like, no matter what profession you're in, you got to figure out a way to get that, passive income or some kind of income stream. And, that obviously leans to commercial real estate and what we do. And that's awesome. So from the moment that you were in the, that from the moment you were in that position, the voicemail, the red light, that till you first pulled the trigger on your first deal, how long of a time span between the time you made the decision to the time you acted and said, "Hey, I'm in it"?
Well, for context, keep in mind I'm in Detroit in 2008, so there were things that I wanted to happen,
Yeah.
but you know the little meme where there's a dog from the comic strip where he's sitting at the table with his coffee mug and everything else is on fire. Have you seen it? He's got the top hat or whatever, and the whole world's on fire. That's kind of how I
Okay,
felt,
yeah.
right? It's like, yeah, I started looking at stuff and it's like, dude, everyone is like hair on fire, running, and trying to give away property. Um, I'm like, I don't know that much about investing. I don't think though that now is the right time. In hindsight, it was a great time to invest if I could have foreseen, what was going to
Yeah.
happen. But so I ended up, waiting, and I actually was just trying to get off the boat, right? I mean, I'll use that same analogy. So I was trying to get a new job, and
Mm-hmm.
all these things were playing in my head. It's like, but will a new job really solve this issue, right? Because a new job is just a new job.
Mm-hmm.
They're going to have the same company challenges. At some point, they may have financial issues. At some point, they may let you go or decide that you're not their guy or whatever the case may be.
Yeah.
But in the interim, that was the best option. So I was actually trying to move out of Detroit. I decided Detroit was not the place I wanted to invest starting out. I
Mm-hmm.
wanted to get to Chicago, and I was going to invest in Chicago. I stayed in Detroit a couple years, actually was on a team that turned Buick around, made it one of the fastest growing brands in America,
Nice.
won a lot of awards, and I've got a beautiful article in the magazine that they wrote about the business and put me in there
Nice.
on my desk here. But when I got to Chicago, that was kind of the time where I said, okay, finally, these things that were holding me back from investing, they're removed. I can invest now. And I started really learning about the city, trying to figure out neighborhoods to invest in, things like that. And in my research, I discovered one neighborhood that did not lose any value during all the craziness of 2008, 2009, all that stuff. It didn't lose any value. The houses
Wow.
pretty much were flat to slightly up. And it was the only neighborhood in Chicago that had that stat. It wasn't Lincoln Park, which was up and down, or Lakeview or South Loop or one of those. It was this little area called North Center. And when I uncovered that stat, I was like, look, again, I've read a lot about real estate investing. I've talked to a lot of real estate investors. I've read books, but I still hadn't actually done it myself. But I
Yeah.
felt like that one stat gave me so much confidence that this location was the right location that we moved forward. We said, look, we're only looking here in this neighborhood. And we looked at properties and ended up buying a 2-unit building. So that kind of got us started. And I would say I've been looking for that neon light, pointing arrow to say, hey, here's where you want to invest.
Yeah.
And I haven't seen a stat jump out to me like that since.
That's awesome. That's awesome. So there was that. Oh well, a few things. That span of time was like 2, 3 years. How
Yeah,
long was
about
it?
3 years.
Okay, and
I
then
think because that was the election was 2008. So 2009 is really
okay.
when I was able to start moving, about 2 years.
Now I say action. Oh, you finally, hey, pulled the trigger. I'm in it. But there was that period of time where you were educating yourself or finding out more. What did you do to prepare yourself for your first deal?
So I think the first thing is that I go back to the boat example because I think it's how I saw my life at that time.
Right?
I was going through relationship challenges. I was single. I was dating this girl. Will I, commit? Will I not commit? I'm
Yeah.
in the city that I'm not committed to. I'm at a job that I'm not committed to and isn't committed to me. So I had so much fluidity. I
Hmm.
didn't know if I was going to be living in that same city a year from now. I didn't know if I was going to be with the same, woman. I didn't know if I had so many things going on.
Yeah.
So it was
Yeah.
hard to just say, hey, real estate, let's go do this. Like I literally moved 3 times
Yeah.
in that same span, and I kept doing short-term leases because I knew I wasn't going to stay. And I
Sure.
ended up staying at the last place for like 18 months, but I kept going month to month because I was like, I'm leaving. I'm going to go to Chicago. So I
Yeah.
kept trying to move and I couldn't. So I had so much instability in my life that it was hard to really lock in and focus. With all of that said, I did read a lot of books about it. And it helped. It was actually the one thing that gave me clarity. I mean, the reason I locked in on Chicago was really because I felt like I wanted to invest in real estate in Chicago.
Hmm.
That was the main reason that I locked in on that market. Plus, it's a great market for advertising and marketing.
Yeah.
Um, but that kind of made the decision for me. So I read a lot of books, podcasts. I guess technically they were out, but I didn't know what the hell a
Too
podcast was
new.
back then.
Yeah. Nah,
um,
I don't think I saw him till like 2 years ago.
yeah,
I'm sure there was some beforehand, but it was
yeah,
like
yeah,
Howard Stern's pop,
yeah,
show or
something like
something
that.
weird,
Yeah,
right? Anyways, go ahead. Go ahead.
yeah. So a lot of books. I did go to um like a weekend training type thing, which was interesting. And then I also went to RIA, so those real estate investor association meetings. I went to some local RIA meetings, and that really helped me just to see other people. Because up to that point, I had never met a real estate investor. So this was all theory. These books that I was reading, I don't know if these people were real who wrote them, right? I don't
Yeah.
know these people. It just wasn't real. And going to a RIA at least made it tangible. It made it go from the theories I read about in Robert Kiyosaki's books to something that real people that I met and knew, were using, and it made it realistic for me to be able to do that. And I would say that I think that the ability to see yourself doing something, you have to have that before you actually do it. And if you can't see yourself doing it because you don't know anybody who's doing it, you haven't had any conversations with people, it just feels like it's beyond who you are today. It's hard to see who you can be in the future without understanding the pathway to get there.
Yeah.
And that's kind of how I felt. And then just even going to a RIA, as simple as it sounds, that really opened the door to me. I remember meeting a guy who he owned quite a few apartment complexes, and I think the last one he bought was like a 60 unit. And just talking to him about it, just I mean, it made it real to me. It made it tangible. It made it a realistic goal for me to have, and I didn't feel like a crazy person who
Yeah.
was just daydreaming. It
Yeah.
made it feel like, no, you can do this. Even though, again, I was working at corporate America doing $1 million shoots, multi-million-dollar shoots. I'm over here in LA and Hollywood. I'm at Maxim parties and Super Bowl. Yet real estate investing felt unattainable to me. It just
Yeah.
felt like it was a dream. And it may seem silly, but we all have these biases about who we are, what we can do, what we can accomplish. And the moment you can start to remove some of those roadblocks, the possibilities open up. And for me, that was really important. That's something that I always try to give back to other people to help them realize that, hey, you absolutely can do it. And you just need to understand what the roadmap is, what the blueprint is, what the work it's going to take to get there. But representation matters as well. So it helps to see people who are either like-minded, look like you, in the same cities as you, things like that. Because again, in these books I just kept reading about Texas and Florida. I didn't know anybody was investing in the Midwest, so that was
Yeah.
another thing that made it challenging for me. So just
Yeah.
I think those things really made it more realistic to move the ball forward.
Yeah, that's awesome. And for those passive investors that are listening, because I think a lot of our show, we have a lot of people that are passive investors trying to figure out the right, way to move forward. And then some people that want to be general partners and they want to figure out how to move from passive to active. For anybody listening, I think in either of those two paths, John laid out just a really good, kind of pathway himself, right? First, he had to center himself. That was your job, your income, your city, you personally first. I heard education, reading books, trying to consume them. I heard meeting other people so that he can actually see others do that. And then, really once the pathway or the road was illuminated in the right path and say, oh, other people can do this and this is how they're doing it. Now all of a sudden, I can relate completely because I had this huge limiting belief about it myself. I invested in single family houses, so $116,000 houses, $120,000 houses. But at work, we were doing $50 million years. And I'm like, okay, I just couldn't see myself personally doing that. And it just kind of triggered, like, you can go do this, Abel. It sounds like, John, for you, it's the same kind of thing, man. So that's awesome. So whichever path you're taking, whether it's passively or passive to become active or whatever the case you're in, apply it to your job or professional world, man. That's a very good pathway to do it. Center yourself, be around other people, take education, and then you it starts to remove the limiting beliefs you have. So, man, that's awesome. Hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. So, John, let me fast forward a little bit. So today, you're not doing just 2-unit buildings. You're doing a bigger, more. You're a podcast host. You're educating others. You're helping people improve themselves. You're helping people invest. Let's fast forward till today. Like, what are you working on literally right now, so that we kind of get a gauge or a sense? And tell us a little bit about your portfolio, and tell us about your world today.
Yeah, I mean, right now we're general partners in over 900 units. We are continuing to grow. We're looking at deals in the Midwest and the Southeast markets. Lots of great opportunities there. We focus on cash flow first. So cash flow is really important to us. I think it's how you drive a business. Appreciation comes second. And the cash flow is what's going to get you through the operations, right? I mean, people look at deals and you can put, nice numbers and big returns and all of that. But the sale has more fluidity to it, right? The cash flow is what we can that's what we can control more. That's what we manage, right? That's what we are going to do on a year in, day in, month in basis, is the cash flow numbers. That's what we can control a little bit more. I can't really control what my exit cap rate is going to be, or what someone's willing to pay me for the property 3, 5, 7 years from now. So we try to focus more on the actual cash flow and getting a good chunk of our returns from cash flow, and using appreciation as kind of that, the icing on the cake, if you will. I want to go back a little bit though, because you started talking about
that's fine.
the way passive investors and active investors can break down kind of what we're talking about. I think it's really important to, you said stabilize yourself, and I think that's a great way to look at it. You got to look at what your real limiting beliefs are. I mean, I can keep going about my story and what I've done. It's really not that relevant to you, right? What's relevant is, how can you elevate from where you're at today to where you want to go through my story, right? Like, that's really what we're trying to get at. And I'll go back there because I guess I hadn't thought about it in that sense. But Abel, you did a good job of just helping me remember some of this stuff. It was so important to make the big decision that was keeping me up at night and get that squared away, because I could not invest in real estate without knowing my, home life situation, where I was going to physically live, like whether or not I was going to marry this girl. By the way, I did marry her. So,
hey, congratulations.
Whether or not I was going to be in Chicago or Detroit or somewhere else. So because I had all these other big decisions that were pulling away at my time and my thoughts, I didn't have the energy to think about my investing. So it wasn't until I settled those major things in my life.
How old were you then?
I was 29. We got married when I was No, I proposed to her when I was 30.
Nice.
I had just turned 30. So
I'm sorry to interrupt. I get excited, but
yeah,
it
yeah.
wasn't until you were able to focus yourself or center yourself on those things.
Yeah, I mean, it's like, it's important because you have to prioritize the priorities. And that's up to you. I'm not saying that you need to go out and be like me and be a general partner, any of that kind of stuff. The way we work in our business is we help two different types of people. Both have the same goal. They just have different views of how to get there. We talk about limited partners and general partners. Let's take the titles off for a second. There's
Hmm.
two different types of people. Okay. There are people who value experiences and they want to free up their time to be with their family or to do the things that they enjoy. They recognize that they need to work to take care of certain income, but they don't want a second job. These
Hmm.
are our limited partners. Okay. These are the people who have decided I would love to invest in real estate, but I want to do it because of the financial benefits, the tax benefits, the diversification. I'm not trying to take on a second job. I'm
Hmm.
not trying to give even more of myself to work when I could be using this time and energy with my family and my
Yeah, heck
friends,
yeah.
doing
Yeah,
the
heck
things I
yeah.
love. The second group are the people who say, hey, you know what? I'm willing to work a little bit harder for a shorter period of time to leverage this skill. I am willing to take on more. I am willing to take on a second job or whatever the case may be, or work a little bit harder in the short term to have more freedom and more leverage, not just with the capital that I have to invest, but to tap into other people and their money to go out and do these larger deals where I'm serving these people. Both are great groups, two different mindsets, and based on where they're at today, but both groups. And we work with both of those individuals. We obviously help those folks who want to free up their time to do the things that they love. We work with them as passive investors on our deals. For folks who are looking to figure out how do they get into real estate as a general partner, scale their portfolio, maybe go from being a single family investor or a small multifamily investor into a syndicator, we work with those individuals to figure out how to leverage multifamily and marketing to grow and attract capital for their deals. So you have to start by understanding what success looks like for you. When I was living in an apartment in Detroit, I had no clue what success looks like because I didn't even know if I was going to have a job the next day. So
Yeah.
once you get those things settled, and now you can focus on the big picture. What kind of life do you want to create? What do you want your kids' life to be like? Where do you want to live? Now you can start to think about these things. And that's where the limiting beliefs will creep up again. But as you accomplish and settle things in your life, you can now go back to the accomplishments that you had. And you talked about it, right? You can look at your day job. If your job is, if you manage a $50 million account or even a $500,000 account, okay, you've got real experience. You have to lean into that real world experience, the real corporate professional experience you have, and use that as confidence that you can become an investor. Because real estate is just like any other business. And just like any other business, you have HR, marketing, finance, different departments, right? You might be the person who wears the hat in all of these departments, but there's
Yeah.
a finance side, right? There's accounts payable and all those things. There's marketing. How many leads are you getting? Whether it be deals that are coming in, whether it be investors, but what are your leads? There's the sales. Are you closing these leads or not? There's HR. Again, if it's you probably don't have a whole lot of HR issues, but if you have a team or other folks that work for you, you may need to manage some of those things as well. So it's a business. Just because it may just be you in the business right now doesn't mean that you can't grow it. And I think people make a mistake in not treating it like a business. And that's where it becomes challenging for people because they don't see it as a business. They see it as either a hobby or something that you have to have a lot of money to do. But if you have a business, if you have a void on your team, you would go out and get the resources that would fill that void. And if you are a newer investor and you don't really know the ins and outs, you would go get a mentor or you would bring on a senior advisor. You would bring on someone who had the capabilities to help you guys navigate those areas that you haven't been in. This is the same thing. So, no matter where you're at in your journey, if you're trying to run a business, being an active general partner, These are the things you need to be thinking about. Running a business, settle your life, figure out whatever limiting beliefs you have, and address them like a business person would, like an entrepreneur would. If you're scared about doing it, go get somebody who can help you overcome those fears. If you don't have all the money to do it yourself, go figure out how to work with other investors or other people who have the capital. If you don't have the property management or whatever other things, go and get those things, but break it down into actionable steps that you can take. Don't
Yeah.
just wallow in, woe is me. Figure out what do you need to fix and then fix it. And I think that helped me tremendously when I stopped just looking at the world of chaos that I was living and said, you know what? I got to figure out where the hell am I going to live? And am I going to marry this girl or not? And once I sat down and made those decisions, then everything else started to flow because the decisions from there become easier. All right, now that we're together, what kind of life do we want to build? Okay, we want to live here, we want to do this, we want to do that. Okay,
Yeah.
great. How many kids do we want to have? And I'm not saying plan out your entire life, but I am saying you need to be clear on what success looks like for you so you can actually move towards it as opposed to letting the universe dictate what your life's going to look like.
Yeah, I love it. I love it, John. What just great insight, tactical information, next steps, and how to move forward. We talk about like people say goals so much, like, oh, I'm gonna write down your goals, set some actions. Sometimes they, at least for me, I won't talk for everyone listening. For me, like sometimes I go, yeah, I set that goal, and then I realize I didn't write it down. I didn't set actionable items. I didn't set a next step, and I didn't measure my progress on it every single week to month. And I go, well, was that really a goal or was that more of kind of a dream? And exactly what you said, the difference between active investor and passive investor, man, I wrote down a lot of the same, well, I took a bunch of notes on your top, our conversation now, but I also, I wrote an ebook during COVID. And that was like where I started. I'm like, here's active, here's passive, set your goals, determine what you want to go after. And that will allow you to kind of set your next steps or tactical actionable items. And that's man, that's at the core of what you're doing. And I love it. I love to hear it because it just, it solidifies it for me and hopefully a lot of our listeners. You got to take action. It starts with setting your own goals, understanding who you are and what you want to go do, your own, skill set in your professional career, whatever you're doing, and then how to make it applicable. And it's a business. We're talking about businesses. We're not, one-man shows trying to buy a $10 million business or building, whatever. But yeah, that's so good, man. So many insights here. And you kind of ended up saying, I heard John say, hey, I'm in 900 doors now. It's not really relevant. Let me tell you about your story. I would say I disagree highly because man, there's so many people that like heard your story and then go, John's just like me. I want to be in 900 doors. It's such an inspiration. Sometimes I say these numbers. How many millions of dollars of real estate is that invested in? I know you're not the 100% owner of all of it, but there's a big number. How many millions of dollars of real estate are you invested in?
It's around 90 million.
So $90 million of commercial real estate. And if anything John said resonated with you today, it's like find other people that, you can be around and watch and see and do. Man, John is one of those guys. And if you're related to that story, it's like, you can do this too. I fully 100% believe in that.
Yeah, I mean, listen, I want people to be inspired by the story, but the reason I say it's not important is, again, you have to focus on the right things. I hear people all the time, talk about their units, the numbers. That doesn't really mean that much, right? You have to figure out what your goals are. And your
Mhm.
goals, no one should have the same exact goals. And if we're both trying to get 1,000 doors or, $100 million portfolios, for what? What are you trying to do?
Yeah.
Because
Yeah.
those numbers are just numbers, right? You should probably start with, what do you want financially? What are your financial goals? And the number of doors doesn't help you with that. If you want a small slice of a deal, having 900, I mean, it could be the same as having 90.
Mm-hmm.
So
Mm-hmm. Mm-hmm.
you may want to figure out, what do you want and how much leverage do you want? How much leverage of time? How much leverage of other people's money? How much leverage of other people's time?
Mm-hmm.
Because what those big deals allow you to do that smaller deals don't is we can work on larger professional vendors. I can hire a professional property manager for 100+ unit building versus if I were to do that same deal on, say, a 15 unit, I might make the same amount of money if I did the 15 unit by myself as the 100 unit, but on that 15, I got to do a whole lot of work.
Yeah.
Versus on 100, I can be a manager and I can just do weekly calls and set, I can set everybody in motion, make sure everybody's good, and play more of an asset manager role. So your goals and the time, what you do with your time, it has to be at the forefront of this conversation, because you may realize, dude, I actually just want to be a passive investor. I don't want to do all this doggone work.
Yeah.
I just want to get paid to, put my money out there and get a return.
Yep.
And that's great, or maybe you do want to do the work and be a general partner. Or maybe you want to start off as a limited partner and then elevate up to a general partner once you get more comfortable and build up your confidence and credibility.
Yeah.
So I just think the clarity is there, and don't let these numbers fool you. Don't let these numbers get you overly excited. I will say that my goal in these conversations is always to be approachable and relatable. I want people to understand that you can do this, but do it because you want to do this. And you got to figure out what this actually means, because what I do, you may not want to do. You may not, you don't get to see how many hours, I put into the podcast
Marketing,
and all those
webinar,
kind of things. Yeah.
Podcast,
The marketing
automations. Crazy.
So you got to ask yourself, do you want that? And if so, great. I'm happy to help people learn how to do that. And you may look at it and say, okay, I thought I wanted that, but really I just want to be the flexibility to work from wherever, right?
Yeah.
And there may be a different pathway for you. There's nothing wrong with either path. You just have to own it, because if you don't own it, if you don't help create the plan, and if you're not 100% sold on it, it's what you said. Is something really a goal? If you don't really start to move towards it, prioritize it, and all those things, then it's going to fall on the wayside. You can't make somebody do something.
Yeah, I love it, man. John, I had an expectation of how today's show was going to go. Totally in a well appreciated different direction, but this is a great conversation, man. I'm super excited. I know that some people are listening right now are going to say, hey, this is exactly what I needed. And if you didn't get the tactical actionable steps, please rewind the show, or maybe you're in your car running or something. When you get home, get a piece of paper and a pen. There's a number of just really actionable bullet points that you can take. So I have a couple more questions before I let you go, my friend. But before we do that, where can our guest, our network, whether I'm an investor or an active investors want to get into your world a little bit more, where should we connect with you?
I mean, the easiest thing is to check out our podcast, Target Market Insights, the multifamily and marketing show. Subscribe to that show. We basically cover two things, multifamily and marketing. And as we talked about here, marketing is really just the function of any business. It's how you generate leads for deals, leads for potential investors, customers, clients, whatever your business is. So a lot of what we talk about doesn't even pertain exclusively to real estate or multifamily.
Oh, yeah.
We're talking about how to leverage social media, how to build a personal brand, things like that. And then obviously we're going to spend a lot of time talking about multifamily investing and all the things you need to know to be a successful multifamily investor. So check out that show. And I would say outside of that, I do have a sample deal on our website. So if you just want to see a sample deal package, whether you are looking to be a passive investor and just want to get more familiar and comfortable with what to expect, what to look for, or you're an active investor and you want to know what in the world you should be putting into a deal, or what you should be looking for as you present opportunities to investors, it's a good resource for that. So you can go to casmoncapital.com/sample deal to download that package.
Awesome. Thank you very much, John. I appreciate it so far. And it's been a great show. Last question, maybe I got time for like one more, is you are a marketing, kind of your professional career, what you do today, your name is out there, your face is out there. We do all of this stuff kind of to get exposure, and maybe we'll direct this to raising capital a little bit, but, give us one or two nuggets you could say out of everything you've learned. What are some mindsets, or whatever you want to leave us with for those that are like, how do I go be like a little bit more like John? How do I go do that?
So first of all, when we were talking about me earlier, part of the reason I said, hey, I don't want to talk as much about me, is it's never about you. Okay, this is the first marketing lesson. It's never about you or your product. It's always about your customer, your client, who you serve. Okay. And that's a critical thing to understand. For me, what helped me make a massive shift in the way I approach things was recognizing it wasn't about me. Because I had those limiting beliefs too. I would question, who am I to host a podcast and tell people this is John Casmon, and all that crap, right?
Yeah.
Um, you
Yeah.
you run through that. It's called you know, what's the phrase?
Imposter
It's
syndrome.
There you go, imposter syndrome. So, you face those kind of things. And what I realized, and I had a great conversation with someone, he said, listen, you don't do these things for you. You do these things to inform and educate the people around you.
Hmm.
And when you understand that position and you come from a place of serving, life just becomes easier. And now you're more empowered because you truly are helping people. Think about it like this. Let's say I was an inventor, and let's take the Under Armour story. Okay, are you familiar with the Under Armour story?
I am. I served him
Okay,
as a client at Rackspace. But
there you
anyways, go
go.
ahead. Go
So
ahead.
I'm a Nike guy, but I'm gonna tell the Under Armour story anyway. Okay,
Right on.
so Kevin Plank, he things of football practice, and all these guys had T-shirts under their equipments and all this stuff, right? And it just T-shirts drenched every day. And he said, man, there's got to be a way to actually have a better product or a better T-shirt that isn't stretched and soaked every day. So he got to designing and ultimately came up with Under Armour, as the name is, right? So the name is really about it being under their football clothes or cleats or attire. So all of that to say, they focused on serving those athletes, right? He built a product that was going to provide a solution for those athletes, and the company expanded from there. We talked about business. You have to treat your business the same way. Who do you serve as an investor? Ask yourself that question. If you're trying to raise capital for deals, who do you serve? Because anybody can just call their friends and family and ask them to invest with the deals.
Hmm.
If you have hesitations on calling your friends and family, it's because you don't think you really add value to them,
Yeah.
because you're not really serving them, you're serving yourself. Because if you knew that what you had to offer could help the person you're calling and they absolutely need it, you would not hesitate, especially for a loved one. If I knew that I could help my mom with something that she needed, if she was having a headache and I could give her Tylenol, of course I would say, hey, mom, you should take this Tylenol. It's gonna help you with your headache, right? Because
Hmm.
that's what we want. And if you believe that your investments are truly going to help people, you would approach it with that kind of confidence. But if you don't, if you're just trying to get money so you get paid, then maybe you don't want to call mom, right? Because you're fearful of what may happen. And I talk about the three C's to raising capital. First is confidence, the second is credibility, the last is connections. The thing that they all have to do, and the reason I say this is, if you are not confident approaching the people who you believe can most benefit from what you're doing,
Hmm.
it's because you have an issue typically in either the confidence or credibility. So either you're not confident in the product or the service that you're serving, or you're not sure of who you're actually serving. So maybe this is a perfect, product or service, but maybe it's not for your mom. Maybe it's more for your friend who is an attorney who's got three kids and is trying to figure out how he stretches out his money and pays less in taxes. So you got to figure out who you actually serve. So I
Hmm.
think that is the number one thing from a marketer perspective, is really think about who you serve, put them at the center of everything that you do. It's going to make content creation easier. It's going to make conversations easier. And then also you're going to recognize that some people just aren't going to be a fit, and that's okay. Go back to Under Armour. They knew who their audience was. It was athletes. It was athletes, in particular football players. So they started there. They didn't go out to basketball players right away, or soccer players, or gymnasts, or construction workers. They locked in on a very tight niche, and from there they expanded their offerings to be more inclusive. So think about that. Think about who can you win with, who can you serve today, and from there you can expand your offerings.
Love it. Thank you very much. That was very insightful and amazing. So thank you very much, John. Is there anything else we didn't hit on today that you wanted to bring some exposure to? Anything we didn't, anything in general?
Yeah, I mean, I would just say, if anyone is interested in pushing forward, if you're ready to make that commitment to become a real estate investor and not just be interested in real estate investing, I'd be happy to do a short exploratory call. So I can send you my link to have people set that up if you do a quick 15-minute call. And I'd be happy to talk to you about, what you're doing, what challenges you're facing, and see what I can do to help you break through and move to the next level.
Right on. Well, John, thank you so much for your time. I really appreciate it. It's been a great conversation. I'm super happy and excited once this airs. It's going to help some people for sure. And again, my name is Abel Pacheco. I'm your host for the Five Talents podcast. If you heard something that you appreciated today, I would encourage you. I would love you also to subscribe, rate, and leave a written review on our show. It would be amazing. And thank you very much. We hope to see you at our next show. Bye-bye. Thanks, John.
Abel, thank you for having me, man. Take care.
Bye-bye. Thank you for listening to this episode of the Five Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the Five Talents Podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the Five Talents Podcast.